certainly markets are buzzing around at the moment, but they're on the record highs. Equity markets continue to perform. Well, they haven't moved on, but they're still at record highs. Gold's at record high as well, and of course, crude oil's come back a little bit. The most important, I think, at the moment, the one we're going to focus on is economic data in China. Now, over the weekend, we had the NBS PMIs. They all came out. They weren't that good, which is a bit of a worry. Remember, the PBOC has put quite a lot of stimulus into the market. And when we look at these indexes, we always want to try and see if we can get a read above 50. Now, that normally assumes that the economy is expanding. But all the reads we had were negative. They were below 50, and that to me does not bode too well, for what the market wants. In fact, when you do look at it, the NBS manufacturing PMI, that came in at 49.1. Market, the consensus there was 49.4. The general was 50.1. The market consensus there was 50.2. So these are all pointing to negative effects in the economy. The stimulus is not working. Because the market just continues to deteriorate. And I think that is a bit of a concern. The PBOC has played out quite a lot of stimulus. We do expect more stimulus to come, and that should help support things or support the market. Equity markets continue to trade on record highs, but I think when we look at the main things out there in the market, Middle East, economic data out of China, and of course equity markets remain on their record highs, which we feel there'll be a little bit of a correction. What's going to happen this week? The main focus will be US employment data out of the States. That'll come out on Friday. We also have some PMI. Now, the interesting thing here is with the Fed. Now, we've seen some PCE data, which also came out last week, which was okay. It's still in the right things there. The market's looking for that 0.25% rate reduction in the States come the next FOMC meeting in September. Some people have been talking about 0.5%. I think if the Fed decides to change, it'll only be a quarter. But we really need to see what that employment data actually says. Remember, we had revisions last time. Now, that was a worry. So this time for non-farm payrolls, the market's looking for about an increase of about 115,000. I really think a number below that will suggest that the Fed will be quite robust in terms of having that cut. If the number is a lot higher, then I think that we could get more of a reserved approach by the Fed. But we are looking for that 100,000 gain. If that is the case, then I think that's not too bad at all. And you'll see the Fed sort of reduce rates. Now, remember, it is all back on inflation, and we've got to see what the inflation numbers are doing. We've also got PMI out this week in the States. And if those numbers are, particularly on prices, a little bit higher, that might be a negative factor. But all in all, I think the market's behaved in a way that we will get a cut, and that's, I think, also why equity markets are on their highs. Please subscribe to our YouTube channel and click like to inspire you to take trading actions.